And good afternoon. Welcome into Market Talk for this Friday, March 12th, 2021. Great to have you here with us once again. I'm your host, Jesse Allen, and you can find us online, markettalkag.com. That is our home on the web, markettalkag.com. Find us on Facebook, Twitter, Instagram. It is all at Market Talk Ag, our great radio affiliates, and more, as well as all of our favorite streaming sources, Spotify, Apple Podcasts, iHeartRadio. It's all online on our website at markettalkag.com. Joining us today, happy to have him back on the show, David Widmar with Agricultural Economic Insights, AEI. And David, it's great to have you back on the show. How are you today?
Great to be back, Jesse. Thanks for having me today.
I appreciate you making some time to join us here on a Friday afternoon. And David, I think a good place for us to start our conversation today is we got that March WASDE report in earlier this week. We have, got a full week of trade in now. What are your thoughts on USDA sort of punting again, kicking the can down the road, whatever phrase you want to use, with this March WASDE report and how it's affected our market trade the last couple of days?
I think the USDA is balancing this act of, um, what information do they know today, and how can they make the best estimate today with sort of speculating what might play out in the future. And I think the USDA is always, I guess, our job on the other side of the report is easy to speculate a lot, and the USDA always has to look at the information they have available to them and the information they can use to make their best estimates. And speculation just isn't in the cards for them.
Well, and we look at where the market trade has gone as well, and I think you hit the nail on the head. Speculation is just not that's not a thing that USDA does, and it's surprising to me that there's so many analysts out there and firms and whatnot that keep saying and keep screaming for us to ration demand and that this carryout number needs to go lower. It's going to have to go lower. Yet, USDA very much is kind of holding off on doing that. And do you think maybe we're waiting a little bit to get some of those March planting intentions in here later this month, and also that South American weather picture? It seems like those are maybe the two things that we're really waiting on when it comes to USDA maybe making some changes to the balance sheets.
Yeah, the question is timing, right? They always say when there's a scandal, what did you know and when did you know it, right? And I'm not saying there's a scandal, but anyway, but I think that's a good framework for our thinking process. What do you know and when do you know it? And so um, I think there's a lot of reasons to be um, there's a lot of good reasons to have conversations about that ending stock number and what's going on in South America, what's going to happen this year. There's a lot of uncertainty out there right now, and that's why we see prices high. There's a lot of there's a tight ending stock situation, but there's a lot of uncertainty, and I think it's just hard for the USDA to. Um, how does USDA you know fill in the gaps when there's uncertainty? And I think we have to know what their process is and what their methods are, and when we think about it that way, we can start to understand how the USDA gets to their estimates. And again, what we have to realize is there are still gaps in what's known. It's that uncertainty and it's the unknowns that's creating a lot of angst or excitement or uncertainty out there. And so it's a good question. I think we just have to step back and think about what do we know, what do we don't know, and what the element of time and how time will help us navigate all that.
Well, David, let's talk acreage. And I know that's something that you guys not only forecast on AEI's website on the AEI Premium, you guys have a lot of research around that. But just in general, we got planting intentions a few weeks away. Farmers are going to be doing field work here fairly soon with the nice weather we've been seeing. Um, what is your thoughts on what this acreage battle is shaping up? We've talked about this before a few months back, and now we're a little closer to it actually happening. What are you seeing and hearing as far as what we could see shape up for corn, beans, wheat, milo, sorghum, cotton? Because we see high prices everywhere. So it's really an interesting conversation, David.
And that's the debate. High prices everywhere. We're not the last 4 or 5 years is which crop was going to get stuck, right? Wheat was the best example of just pushing all of its acres onto everything else. Now everybody wants to bid a little bit. And so I think the most relevant question for this debate, and we've wrote a lot about this on AEI Premium, is, I think about it, what's the total number of corn and soybean acres that's going to get planted? And we've done some work, and if you sort of adjust for prevented planting and said, what's a normal prevent plant look like? Last year, the U.S. ag factory for corn and soybeans was 179 million acres. Now, of course, it could go down if prevented planting was, like we've seen in the last few years, above normal. That 179 could go up if we had below normal prevented planting. But 179 was the number for last year. USDA in February came out with that model estimate of 92 million acres and 90, so 92 corn, 90 soybeans. That to me was a signal that's really important. The U.S. Ag Factory for corn and soybeans is going to expand to 182 million potentially, right? And I think it's this expansion that's going to start to. I think people are going to walk away from some of these reports saying, "How do we get more acres of everything?" And I think we think about the four big crops. Even if you added cotton and wheat into the USDA's February numbers, everything was up a little bit. And how do we do that? Well, we're going to pull some crops out of some of these small grains on the margins. And we're going to maybe think about fewer pasture acres, fewer fallow for, things going into wheat next year, maybe some hay ground going to come out as well. But the strong signal here is to produce. And so we can plant more acres or we can do more with the acres that we already have in production. So I think it's going to be kind of a lot of incentive to pursue that. So 182 million is where I think you start. And then if you move to the next question is how do we allocate those acres between corn and soybeans? The price ratio is very strong for soybeans, gives you about a 50-50 ratio. Personally, and all the work that we've done, it's all on the website. Folks can go read it. I think corn actually, maybe you tilt from that 50-50 and you put some more acres back in the column. And why? It's a combination of factors. One, it's a strong economic outlook. Overall, there are profits out there. And when there are profits out there, producers start thinking about the upside, and the upside potential generally goes to corn. Corn's a riskier crop to the upside and the downside. This year, they're going to think about how can I maybe hit a home run? And I think corn might, but we'll see. We'll see how that comes out in the March report. We'll see how plantings actually take place this spring.
Well, we have to think about, and you mentioned, hitting a home run, and we've talked about this quite a bit here the last couple of months. But where these price levels are at on new crop, some of these producers, you have to think that they're at least hitting some triples and maybe some home runs with where things are at right now if they've done a little bit of marketing, because some of these price levels, and you alluded to it, kind of that spread between soybeans and corn, it kind of leans more to the soybean side, but there's really good price action throughout this entire complex here as we look into some of those 21, 22 crop prices, David.
Exactly. So you start thinking about the crop insurance price guarantees we set. Again,
Mhm.
record favor to soybeans on that ratio. But when you start putting them through the budget, you see that the corn has a little bit of an edge here. The low cost environment's been favoring corn a little bit, especially if producers could lock in their fertilizer prices last fall, right, or earlier this spring, or they don't have a supply hiccup here in the spring months. And so I think that the big takeaway here is that while soybeans have the advantage, the overall environment is that it's a strong economic outlook, and that's really favorable. So I used an example the other day in a presentation. I said the price ratio is kind of like the cards that a poker player has in their hands, and that's the first step. Now the poker player looks at more than just that. They got to play the table. They got to play the what their chip lead is, who their opponents are, where the blinds are. And I think when you start looking at some of these other factors, corn starts to be maybe a little bit of advantage because of this strong economic outlook. When times are lean, we say that soybeans has a bit of an advantage, and it's the same idea, operating leverage that gives corn a little bit of advantage here in the up years. But yeah, keep an eye on this report, and we got a real. So here's another takeaway that we wrote about when we see this March perspective planning report. A lot can happen between March and June, and prevented planting could be a huge source of uncertainty. More often than not, in the last 10 years or 20 years, actually, total acreage has gone up or gone down between those two crops. We don't see a lot of that switching. We see it in some years, but a majority of the time, they either go up together or down together, and that's prevented planting is a huge part of that. And it's been to the downside in the last few years.
Let's talk inflation a little bit. That's kind of been the buzz term throughout the last few weeks, and it's how it relates to not only commodity markets but just folks in general. Who might be listening and worried about inflation. We just got this big stimulus package. signed into law, passed through Congress. Looking at a lot of these different macro factors that are in the marketplace, record highs in the stock market this week. Talk about how all of those macro factors and inflation is kind of playing into our overall market landscape right now.
Right. So without getting into, my personal opinions of where inflation is, I think it's important to step back and just look at the environment as you did. Inflation is just in every conversation. It's the reason why something's happened, and it's the reason why something's going to change. It is, it's kind of a adjective, a noun, a verb, and inflation, right? You put those things together, and you can have a compelling argument for something. I think there's a couple points to keep in mind. If someone's using inflation to explain something, there's a couple questions that you can push back with. One is, what do you mean by inflation? What specifically do you mean? Are you talking about 4 or 5% inflation, which, by the way, would be much higher than anything that we've seen in recent memory? It could still have impacts on the economy. Um, or are you talking about 10%, 10 plus percent inflation, which is where everyone's mind starts to go, right? This is where we sort of have this fear. We hear the word inflation, we think double digits, but there's a very big difference there as to how you think about this. The second thing I'll point out is the timeline. Are we talking about, I think a lot of the concern is double digit inflation in the next 6 months. Well, I'm not sure we even have the data to capture that, right? We might take us a few months to actually realize that, but what's the time frame? Are you talking about in the next year or over the next decade? I think there's a lot of concern about double digits inflation or high levels of inflation in a short period of time. I think there's a lack of conversations about what they're really meaning. But I think there's also, we're underappreciating how 4 or 5% inflation spread out over a decade could really even change the landscape. So think about the magnitude and the duration. And I think we have to be, as decision makers in ag, we have to ask tougher questions of those who are using inflation to explain what's happened or what might happen in the future.
What about those record highs in the stock market? Any thoughts on that and how that maybe has spilled over into our commodity sector, David?
That's a good question. I think, you know, there are just a lot of moving pieces in all of these environments. It's true this low interest rate environment is positive for this earnings, right? It's low interest rates, ceteris paribus, or all else equal, means that we're going to bid up asset values. And we're seeing that even in farmland, right? Strong returns plus this low interest rate environment is tinder for a hot market for farmland markets. And so I think it's similar story maybe in the stock market. What we have to realize is that there are just so many things happening at one time. So, one of the lessons I think it's really important to keep in mind is we have seen a lot of complicated things play out in society. A pandemic, an economic recession, the likes of which none of us have lived through, or very few of us have. And now we're going into a recovery where there, who knows what this recovery is going to be like, but we haven't seen a recovery like this. These are very complicated things with a lot of moving parts, and we have to be careful of these simplistic dialogues or simplistic reasons to explain something. So, what happened in the pandemic, what's happened in the slowdown, a lot of moving parts, a lot of factors going in together. Be careful of simplistic, short, sensational headlines to explain what's happening or what will happen, because there's just a lot going on.
That's a great point. Let's talk China briefly. I know this last week we've seen some sharp sell-offs in the Dalian futures. They're having African swine fever issues over there. How much are we seeing the China factor play into things here with our markets? Obviously, when it comes down to what we're seeing in their marketplace, and then obviously, the other thing too is exports. I mean, we've sold a lot to China. Now we got to ship it. How much? What are you taking away from some of the news that we're seeing come out of China here the last week or so, David?
Right. So I think all of what you just described is underpinning, I think, this 30-ton elephant in the room. It's uncertainty about China and China's reliability as a trade partner, and the US as a reliable trade partner to China. It's this strained relationship. And so when you look at what happened is we went from things going pretty predictably upward, them buying more things every year, to this trade war where it fell back off. And then there's a lot of ways of measuring what's happened. But when we measure it and the data we look at is we pretty much bounced back to where we were before the trade war, but we haven't set any new records, right? Soybeans in last calendar year were pretty much the same as pre-trade war levels. Total dollars of exports were pretty much the same as pre-trade war levels. So China's back, which is a good thing, but I think there's just a lot of questions as to, can we count on that again? Because a lot of this narrative that we've built up in our minds here is China's back, we have tight stocks, and if one of those elements starts to fall apart, we don't have as much enthusiasm in this marketplace. And so China is very important trade partner. They're back, but that dip we saw in the trade war has everyone just sort of on edge. It's the last thing we remember. It's right in the rearview mirror, and everyone's sort of worried of what happens if something disrupts that. And of course, African swine fever. It's interesting. African swine fever was the pandemic we were writing about in December of 2019, right? Is that going to be the thing that disrupts the global trade economy in 2020? It wasn't. And in a lot of ways, COVID-19 probably kept African swine fever at bay. But as the economies reopen, I think African swine fever is something to keep a close eye on.
Very, very true. One other point, related to China and just the world in general, I wanted to ask you about before we shift our conversation again. This bean oil market, this world vegetable oil market, that continues to soar. I mean, canola futures making new highs, bean oil making new highs. I know China and some of those Asian countries, big players in the oil market. What do you make of kind of this explosion, so to speak, in the world veg oil market here the last couple of months?
Again, a lot of complicated factors playing together. And this is, we're also getting a little bit out of my wheelhouse. I'm afraid that
Mhm.
I would offer a simplistic solution that wasn't a complete narrative. It also might make me look ignorant on the topic. But again, we have to just be careful with the narratives that are being tossed around there, and just keep an eye on this reality that the world's going through some things that we just don't have a lot of
Mhm.
historic reference to think about. So as the economies reopen, as trade relations with China swing back to the normal, China's only been back as a buyer for about 6 or 8 months, right? And so everything is just in this kind of limbo and uncertainty, and we're headed towards a new normal. And I think that's in a lot of ways, right? It's a new normal to trade relations, a new normal to the economy. It's a very fast moving environment for everything.
I'll pivot back to the African swine fever conversation just real briefly. We see hogs here in the U.S. Some summer month hogs up around $100, and I tell you what, this entire livestock complex, hogs have been a little better off lately. Cattle have been kind of stuck in the doldrums, but really, it seems like there's a lot of optimism surrounding our livestock markets here in the U.S. Are you hearing that as well?
Yeah, it seems like there is a lot of optimism coming from that. Again, I think it's back to this new normal idea. What happens when consumers can? I think the president gave a speech earlier this week saying we might be able to have small get-togethers by the 4th of July. Wow, what does that mean for barbecues, and what does that mean for the supply chain of, you know, what people are going to start to do in their behavior as the economy starts to come back together? I think that's a huge element to this, but also there's still the supply chain issues that we're dealing with from 6 months ago. But again, every industry is a little bit different, or every species is a little bit different how they're dealing with that. And there's just a lot of transition going on as we return to what does it look like in 6 months? Because I think 6 months from now, all of this will look a little bit different than 6 months ago. And so we're quickly moving out of the the valley of so much bad uncertainty to now there's sort of this optimistic uncertainty, like this could turn for the better. But yeah, it's keep an eye on all of that.
Well, before we wrap up today, any final thoughts you would have for our producers listening in, especially on the grain side, as they're kind of navigating things right now and they have planting coming up? They're going to be spending a lot of time in the field and looking at their marketing plans and everything else. You got any final thoughts maybe to share or anything to reiterate with them?
Right. So I would encourage them to think very specific about the uncertainty. So let's something that we use in the AEI premium. So we're thinking about this perspective planning report, and the two questions we are asking the users including growers or experts like everyone listening here, is what's the probability of the USDA's March report having more than 92 million acres of corn and probably more than 90 million acres of soybeans? And so rather than making these point estimates, think about what's the probability of this being above 92 for corn and above 90 for soybeans. And then you can adjust your expectations as new information because, you know, in the next week or 10 days, we're going to see a whole slug of estimations, right? And we should use those to update our expectations. And then as they go in the planting season, start thinking about what's the probability of us getting more than 92 million acres planted or 90 million of soybeans planted, given the weather and the price responses and all the new information that becomes, as we started this conversation off, as the USDA updates those WASDE estimates as they get new information. So we should always be recalibrating our expectations. So think about uncertainty specifically and then recalibrate your expectations.
Well, I know folks can go to aei.ag to learn more, and they can check out AEI Premium there as well, and the Forecast Network. And you guys have a lot of great insight on AEI Premium, and I know folks can get a trial on the website as well, can't they?
Yes, so it's kind of a self-service. Go in there, check it out. There's the content, data-driven insights from the content. We have a weekly newsletter on Friday, but then the Ag Forecast Network tool helps you take those uncertainties, challenge yourself, and learn from others in the platform.
AEI.ag. That is where you could find it all. And with that, he's one of the co founders of Agriculture Economic Insights, David Widmar. Thank you for joining us on this Friday. Always great discussion with you, sir. And look forward to having you back on the show soon.
Thanks, Jesse. Take care.
David Widmar, our guest today here on Market Talk. Find us online, markettalkag.com. This has been the Friday, March 12th edition of the show. I'm Jesse Allen, wishing you a great afternoon and a great